It's John Michael Lust, Vice President of Operations at PlanScout. Today I'll be showing you how the SIPS retirement planning system can help you easily add income taxes to your financial plans using our advanced tax planning feature. Income tax analysis is a key component of a strong financial plan. As clients begin their retirement journey, it is important to understand how they're changing incomes from transitioning from earning wages to withdrawing from savings, starting Social Security or pensions, and then taking required minimum distributions can affect their future income taxes. Without proper planning, these future tax burdens can catch clients by surprise if they're higher, sometimes significantly higher than expected. With SIPS Advanced Tax Planning, which is now available in our SIPS Advanced subscription plan, we can easily and automatically calculate estimated income taxes for every year of the financial plan. All right, well, let's get started. So we're beginning here with an example client. They're a single client with a couple more years worth of work here before they retire. They're earning about $100,000 a year. They'd like to take home $85,000. They've been good savers with $750,000 in non-qualified assets and $1.25 million in their IRA. And we've done a lot here to set up the financial plan, but the key thing that's missing are the income taxes. So first I'm going to show you how we would calculate those manually, which is something that we can do in the Cash Flow and Tax Advisor. So I'm going to just take a look at year one, and we're going to say, okay, in this year we're earning $100,000 worth of wages. So I'm going to remember that. I'm going to go to the Cash Flow and Tax Advisor. I'm going to click Edit. I'm going to add a scenario. I'm going to make sure I choose the right year here for my tax rates, and I can rename this something so I know what year it's for. And I'm going to put in my $100,000 worth of wages, and I'm going to click Calculate. Now, if I scroll down, I can see that SIPS has taken into account the standard deduction when figuring out our taxable income. We've got the 22% marginal tax bracket for this client and an effective tax rate of about 13.4%. So they would expect to pay about $13,400 in taxes for this first year. So I'm going to take that effective tax rate of 13.4%. I'm going to go back to my structured income plan. I'm going to click Edit. I'm going to add an income tax here. And I'll put in 13.4% for my starting effective tax rate and click Save. Now, this has added an approximate income tax column. And we can see this is running all the way down the plan. Now it's calculating the effective income taxes, and our after-tax, our target income column is now an after-tax target. Now, what we should be doing if we were to continue the manual process is look at every year where there's an income change. So year 3, when we begin taking from non-qualified, year 6, when we start Social Security, and then year 11, when we begin RMDs. And we would go back to the Cash Flow and Tax Advisor. We would create a new tax scenario for each of those years based on where the income's coming from, and then take those effective tax rates, and we'd update the appropriate years in our plan. This is a manual process. It can be time consuming if you've got clients with lots of accounts and lots of different income sources that are changing throughout the plan. It can also be error prone if you're manually trying to figure out the capital gains or dividends or turnover in their non-qualified accounts. So let's see how the advanced tax planning features can make this process easier for us. So to do that, I'm going to go back to my tax screen, and I'm going to click the Use Advanced Tax Planning button here. And I'm going to click Save. And this is going to give us some new tax calculation options in our accounts and our different incomes. So let's make sure those are set correctly. So first I'm going to go to our non-qualified account. And I don't want tax income distributions because that's something we'd use for something like an IRA. But I am going to use this non-qualified investments, dividends, and capital gains option. So I'll set that and I'll click Save. And then I'm going to go to my IRA. And this is already set to tax income distributions, which is good. That's what I want. So I'll click Save there. And then I'll go to the client one, wages. And now for the wages or other incomes, we can set different taxability types depending on what type of income it is. If it's wages, Social Security, pensions, other income, or even not taxable. So we'll leave this as wages here. And we'll leave the Social Security with the Social Security tax calculation option. Now we can see some changes here. SIPS has recalculated the effective income taxes each year. We can see in year 1, this is what we would expect based on what we calculated manually. And then between years 3 and 10, we can see those income taxes go to effectively zero because we're only taking, some capital gains from the non-qualified and Social Security income. And then in year 11, once RMDs begin, we can see that income tax rate increases sharply, starting at $14,000 a year at 12% effective tax rate and increasing for the rest of the plan. Now, sometimes clients have tax activities or tax situations that aren't reflected on the SIPS plan, and we can do some manual overrides for that here on the tax screen. And one common situation might be a client with a lot of Schedule A distributions. So let's pretend that this client has, say, a large mortgage and some property taxes that they're going to pay off within the next 5 years. Let's say they're paying $35,000 a year total for that. So we'll put that in for the first 5 years. And we can click Save. And now we can see how those taxes have changed. It's really obvious in the first couple of years here where we were previously paying about $13,000 and now that's quite a bit lower. If you're ever curious about how SIPS is calculating these taxes, you can create a tax scenario automatically. And it'll show the breakdown of what that is. So you go to your tax screen and down in the bottom left, you can select the year you want to create the scenario for. You click Create Tax Scenario for that year. And here is our year 1 that we've calculated with the automated advanced tax. So we've still got $100,000 of wages, which is great. We can see our Schedule A deductions here of $35,000. And SIPS is going to compare the standard deduction to the Schedule A deductions. And it's going to take the largest and use that to calculate our taxable income. So we can see for those years where the client's paying off their mortgage, they are going to pay a little bit less in their taxes. Now, if we go back, we can also, I want to take a look here. I want to specifically call attention to these low tax years from years 3 through 10. And then from years 11 plus when we start taking required minimum distributions, because this is something that we can see a lot for clients who have been diligent savers, particularly if they've been saving in their IRAs, where we can see that this required minimum distribution is actually higher than his income need. And we can see that because we have an income surplus over here on the right and a number of years and the higher income taxes that are resulting from that. So as an advisor, this is a great opportunity to investigate for this client whether there are opportunities to move some of these tax-deferred assets to a tax-free vehicle, such as a Roth IRA or maybe an IUL, and use up some of the tax bracket capacity in these years. And that's all there is to it. So just like that, we've seen how the SIPS advanced tax planning features can help us quickly and easily estimate income taxes for every year in the plan and identify opportunities where the client can reduce their future tax burdens by using Roth conversions or maybe funding IULs with their tax-deferred assets. Stay tuned as we share more information about all the exciting new features coming to the SIPS retirement planning system. And again, this advanced tax planning functionality is already live, included in your SIPS Advanced subscription. For more planning resources and tutorial videos, please visit www.sipsplanning.com. And for more information about our outsourced financial planning services, please visit planscout.com. Thank you very much and have a great day.